Good day, all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up for this Friday, the last trading day of May 2019, May 31st. Wow. Wake up this morning and we hear that the president's pulled out of his bag of tricks something else. He threatens Mexico with a tariff that starts June 10th, and every first of the month up until he gets to 25%, 5% June 10th, 5% July 1st, August 1st, until he gets up to 25% tariffs on Mexico of everything. I didn't see a list that just says it's this or that. It could change, but that's what it is. This is not something that was very popular with Mr. Lighthizer. I don't know what Mr. Kudlow thought, but it's a frustration move because no matter what the president does, the reality is if Mexico keeps leaving, people migrate through their country in these massive caravans. And you see it on the news. He's going, why aren't you stopping this? Why aren't you turning them back at the border? And their own Mexican people are probably saying, enough. You know, first it was a novelty. It's no longer a novelty. So he's forcing Mexico to do something. That's the idea. Do I personally think the tariffs will go through? I don't. I think Mexico will be smart and react in some manner to stop this. Put a plan in, and the presidents will say, let's see how the plan works, and we'll hold off for a moment. Got to do something. That's my interpretation of it. The stock market certainly didn't like it. The stock market had to deal with a weak Chinese PMI coming out. The American consumer pulled back a little bit as well. I mean, we're not an island nation. You do know that. You know, we've got trade partners and everything, so you've got to look. You got to wonder, look at how fast we turned on Mexico, and here we're about to hopefully get a trade deal done with them. But this immigration issue, it isn't going away, and our own Congress doesn't make it easy for the administration. So, energy prices. China, weak, down. And I mean down hard today. When you look at grains, I can understand the grain markets backing off with or without Mexico. They've been on a tear, and now a bull market that's caused by weather in grains needs to keep the weather coming. We'll see what the 10-day forecast over the weekend looks like. When you go to a monthly area chart of the S&P, all you've done, and this is the most fascinating part of this, we're up. You know that that's back in September. You started your decline October, played around November. Then we had that monstrous break into December. We began to recover in January. We furthered it a bit come February, March. I feel like I'm doing that song. April, May. April. And now what the market has done is it's begun the correction. So we recovered, which I think a lot of us didn't know. Got asked on BNN TV the other day. I said, well, Ira, you're in this correction. All you've done is make back what you've had there. I'm agreeing. You're still ahead for the year, but the question is, does it give anything up from here? And you're back in on a monthly chart to a point that's of interest. You're back to some support there. When we come to the weekly chart, you've come straight on down, and for this week alone, you're down nearly 2.82%. The thrust of the market, clearly to the downside. You can see on the weekly chart, very similar action, even though you made the higher highs, very similar that it made all that up. I have heard people saying that you're going back down here, maybe lower. We'll see. If you take that low to that high and you start drawing Fibonacci numbers, you know, you're going to get into here somewhere 50% correction around that 2650 probably. That's been a common number that traders have thrown out. And I think next time I'll do a Fibonacci count for you to help us figure out that market. When I take a look at the swing lines, they have turned bearish. So you have a pattern where you've got lower highs, lower lows. You'd have to get back up over 2876.50 to negate that pattern. Where's the market fighting from? The 18-week average. It's under it. So another potential spot comes in at the 100-week average, which is 2701.50. And you'd have to get to the 200-day average, start attacking those lows. And it's possible, but that would be the next zone if the 100-day gives out and if the Bollinger Bands give out. Now, the Bollinger Bands come in at 2681, pretty close to that 100-week average. So if the market's going to extend down, that's the possible zone where the market could find support, more likely zone than the 200-day at this point. And the resistance is back up at the 2830 level, the 18-week moving average of closes. When we look at momentum, it's down. So you have bias down since you closed under the 18-week. The trend is down. Momentum is down, putting into play the possibility of getting further down to that 100-day in the Bollinger Band. In the NASDAQ, it's not the same because you've gone straight from an up move to a down move, and you've got the pattern of, if you think about it, a higher high and a lower low right here. So not quite the type of trend that you have in the S&P, which is a lot cleaner. Same thing though. If you drop from here, 68.10 to 67.49, that's the Bollinger Band and the 100-day average of closes. When you come to the Dow, you've already hit and stopped at the Bollinger Band. And one of my theories is, first time you hit a Bollinger Band, markets often you'll see traders take some money off the table. Assuming they're short, that's the first zone. The 100-week is right underneath that, as you can see, at 24,570. Resistance back at 25,847, which is an interesting number because if you get over 25,000, and what is that exactly? 25,904. What happens is you negate this downtrend leg, and then we'll say that you're back into a sideways trade market for a bit. In the Russell, you went down to the lower Bollinger Band. That number's 1465.90 that you finished at, and that's right under the 1473.20. So you got under it by a fraction. Do you follow through is the question. You've got a higher high, lower low, momentum down as well. Remember, we don't look for overbought or oversold on weekly charts and slow stochastics. Now in the VIX, you're at a resistance point right through here. On the daily charts, not the weekly, what I often look at is when you hit that top Bollinger Band, and you did not do it today, didn't even get close to it, that's where I think the pros step in and go the opposite way by writing calls and so on. Right here, though, what I'm seeing is an uptrend. Higher lows, higher highs at a resistance point, the upper Bollinger Band. I think next week's going to be very interesting on this chart. In the 10-year note, wow. 2.1413, that's the number that the real yield's coming in. Wow. And remember, it's a benchmark rate in the United States. But this thing has just been on a tear. Over the Bollinger Band, you know what I'm going to tell you? I'm going to say markets spend 95% of the time in the band, not over the band. And over the band generally gets thrown back. I will not change my opinion with all that news. You don't get hot-headed when you're in the fire. You use your sense. I think the traders are starting to take some money off the table. In TLT, you finally got over the band. You've been running it. Now you're at that point where I'd be nervous. That doesn't mean that the market can't go lower in rates, but you really need the world to come apart to keep this thing from going and going. What are you going to do, crack 2%? I guess you could, but there gets to be a point of reality to it, and the U.S. economy isn't looking all that bad. This is threats of a lot of things, tariff wars, China not getting along, but the U.S. economy, it's humming on 7 of its 8 cylinders pretty good. Dollar index. We had talked that the market might see resistance at the upper Bollinger Band. It's seen it before, it's seen it before, it's seen it before. Take the name off the chart. Don't let your emotions trade with you. That market's at a resistance point. Doesn't mean that the market can't go higher. It's at a resistance point where I think the traders have backed away to a degree from it. In the eurocurrency, you're down to a support point. Now, I wrote my metals report, and I had done it during the week. I didn't write it. I videotaped it now. And I was expecting this to hold and to give the market a bit of a bounce, and it's happening on the daily chart, so we'll see where that carries with the market. In the British pound, lower highs, lower lows. It's such a mess there. But, again, when you're under that Bollinger Band, it's not an area that I think a lot of traders like to press to the short side. Did the market close terrible this week? It absolutely did. And we'll see what happens. You were trading pretty much sideways, and you're breaking out to the downside. Canadian dollar, right back down to the lower Bollinger Band. It's not in a trend. It's got a higher high and lower low. And I'm sure Canada's going, what the heck's the U.S. doing with Mexico? Is this going to screw up the deal, the USMCA deal? A lot of questions there. In the Japanese yen, when you wake up to the news of a tariff and you don't know what's going on, there's called safe haven plays. They're the bonds, they're the note markets, they're the yen, and traditionally the gold. Gold came alive this time on it. Higher lows, higher highs, and Bitcoin came alive on a lot of this news too. And you can see how Bitcoin's been on a run to the upside, just running with everything. And now we have 5 weeks in a row where the market looks like it's over that Bollinger Band. That's 5 consecutive weeks. That gives me a 0 probability. Remember, this is a rule of thumb of the market being over that number this coming week. We'll see if I'm right or wrong. In the Brent versus the WTI, wow. Look at the differential here. You're back to $11. So you'd gotten into 7, you've moved out $4 in that favor, but all the energies are under pressure. You've got a downtrend in the sense of lower highs, lower lows. You finished out at 64.61 under the 18 and the 100-day average. If you continue down, are you going to make a run for the lower Bollinger Band, 61.75, or is the market going to get back into this spot right here that it was trying to hold until today of the 100-day on a rally and the 18-day average of closes? WTI, lower highs, lower lows. Bollinger Band, $52, nearly $51.84. Boy, that market came apart. For the week, down 9%. In WTI, 6% in the Brent. Those are big numbers. And of course, seeing today the tariff news, the Chinese news of their contraction on PMIs, that's scaring the market. Rebob gasoline all the way down to the 100-day, 18-week moving average of closes. Trend down, momentum down, market backing away. And, we were talking during the week, and I was saying, so strange on Memorial Day, you didn't get a rally on gasoline. That was problematic. Well, now we're seeing that. Same in the heating oil, which is distillates. Higher high, lower low. Are you going to just trade in this sideways action now? I don't see a trend here. I see a market that's got downside momentum. It has gotten down to the lower Bollinger Band. The question is it going to be able to bounce there or not, or is this something else that's developing on the chart? So you put it all together, you try to come up with a game plan, and that's what I do in my morning subscriber video. At 5 in the morning, I'm up and reading away like mad. It's everything. It's Bloomberg, it's Reuters, CNBC, Fox. I'm reading everything you can imagine, the journal, and getting things ready, and I start talking about them at 6:15 in the morning in a video that I record. In this video, I do not appear. I've got my headset on, I'm talking over it, I'm assuming you've got your cup of coffee. And the markets I cover are just this sequence each and every time. You're able to move your cursor over the bottom and get to any subject matter you want instantly. It'll light up and say metal markets, so it'll say grains, energies, just move where you want. We even put a lexicon on the side so you can click that. The difference of this video from what you're seeing me do now is I can say buy here, sell there, put a stop here. This is where I think you're trying to take a profit. I'm able to talk real trade through it. Here in these videos that I do, I have to talk the general trend of the market. That's what the government says. The reason the difference, user ID, password, not available to the general public. It's for my subscribers. So if you'd like to see this in action, we do it for 30-day periods. It's simple. I ask for you a commitment of 26.5 cents a day, $7.95 for your first 30 days, and there's no contract. You can stop whenever you want. If you decide to move on, you can either go with next 30 days, it'll be $15, or you can buy a 1-year subscription to it for $156. Your call. You can find out much more about this. Just go to www.iraepstein.com under the word education or research, and away you go. I'm Ira Epstein. Thanks for listening. Have a great weekend. I'll see you all Monday.